Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Greetings everybody guys, let's take a look again on euro currency. So really interesting things right now stand in the United States domestic finances as actually in the statistics that we're getting. So nobody already surprising with some manipulations with the data and so on, and how it presents to the market society. So at the first glance you see great numbers, 254,000 created. It just turns upside down the expectations concerning the next Fed step and so on. But when you start digging in these numbers, you will see that everything actually is not good. This is first moment. Second moment, based on some indicators, we have identified the real problems with the liquidity in the United States. And when the problems in the liquidity happens, you do not care about any statistics, what the return you could get on some assets or so on. You just need the cash to close the gaps in your margin calls, to fulfill your obligations, to pay out some debts and so on. From that standpoint, you absolutely don't care about what profit you could earn on some trades or so on. And from that standpoint of view, this really could make the big impact on the performance on the Forex market in the nearest few weeks. Because the things that we have identified, now it is impossible to say whether it will be long-term, it's structural problems, or Fed and United States Treasury will be able to mitigate these problems and resolve it. But that makes impact on the performance on long-term charts. Currently, situation stands not really awful. Currently, it looks like some retracements on the markets, but the problem is that it has fundamental background. Usually, when some action on the market, swings on the market have fundamental background, it very rare resolves fast. An indirect confirmation of this, it might be stand around the new initiatives from the Fed's governor at the bar. We talked about in details about this issue last week. In 2 words, just remind you that he offered the method to transform banking reserves, which is actually right now around $3 trillion, an ability to replace cash and reserves with United States Treasury bonds. Usually, when everything is great in the economy, such initiatives are not just introduced because everything is just great. What for? I will replace cash with the bonds. And indirectly, this initiative disguises the problems with the demand on United States Treasury bonds. So all the stuff together, some liquidity problems, jumping on the overnight rates in the last week on the, above the 5%. There's some curious initiatives concerning the collateral in the United States financial banking system. All this stuff makes me a bit worried on the background of all these events. So, and from the technical point of view, it could be considered on a long-term charts. Here's what the problem actually we have. If you take a look at the monthly chart on the euro, it's actually very familiar to us. So here we last time and in general previously we talked about bullish trend. It stands still bullish, and we considered possible bottom line reaching 115 area and challenging on the pivot resistance one, especially when market was able to return back above the pivot. And normally it should keep on going to the pivot resistance one. But at this point, market has completed got this triple to sell pattern. There are some problems with this pattern as well. I will show a bit later. But currently, the question is what this downside action is. whether it is just a pullback before upward continuation, right? Or 222 also works sometimes as a reversal pattern. And if fundamental problems that I just have mentioned will be a long-term and structural without being resolved, that could mean big demand for the United States dollar, because this is a liquidity issue. Everybody needs dollars, and there's not enough dollars in the system right now. So, and it could trigger a really big reversal, not because of some problems with the euro or because it's weak, but just because of the demand for the dollars. So, and situation seems even more sophisticated if you take a look at the dollar index. So on the dollar index here, you could see the bounce, and here the same 222 as on the euro currency, and here I could ask the same question: what is it? Whether it is just minor pullback, some retracement based on recent events, maybe geopolitical issues or something, or this is really indication of the structural problems, and we will get significant upward action. Concerning dollar index, here is even more tricky situation, because if you take a look at the very long-term chart I already have shown you previously, you could see that potentially overall picture looks bearish on the dollar index. So you could see that we have big engulfing, some pullbacks, big sell-offs recently, and actually this sell-off was also very strong, and here it looks like just minor bounce. And the old trick stands right now with this bounce. What is it? So whether it's, as I said, a real problem and dollar will turn up again, or just minor reaction and the Fed will be able to resolve this problem. So we will see what will happen. But overall, things that now are going in the United States financial system, I do not like it. Especially if you take a look at other markets. So for instance, you could see what's going on the dollar index, right? So we have considered on the weekly chart as upward action. On the daily chart, it looks even more impressive. It happens together with a rally on the United States bonds. So take a look what's happening on the 10-year bonds. It's jumping in one session for 15 basis points. This is very big move. Potentially it might be reversal pattern here. So here market totally ignores any Fed rate cuts and makes its own decision what's really is going on here, what they should do. And yields currently are rising. So in fact, the cutting of the rate doesn't help at all, especially for financing holes in the banking balance that hold the treasuries on the balances, with a big paper losses on the balance, potential losses. So besides a rally on the yields and a dollar, it makes negative impact on the stock market. It will make the pressure on it, so which is also not good. And this is a major concern in the long term. In the shorter term, we will be pragmatic on the performance and will focus on some particular technical setups. So on the daily chart, what we have, actually trading plan last week has been completed very carefully. You could see market indeed has challenged 110 lows. No washing rinse has happened. It was just collapse. But as we said, that will be somewhere around the floor because this is oversold and 50% fib level. So that has been complete. Market stuck around 109.75. This performance obviously looks bearish, but problem is that we have support area near the oversold, which together called as Giordanopoly bullish stretch pattern, which means that first step on the beginning of the week by technical logic once again. This will be some minor or some kind of upward pullback. That's what we intend to watch for. So those who trade on a daily chart, if you're trade on daily weekly basis, in fact this area is vital for the bulls. So somewhere around this level it will be vital, because weekly trend direction, also MACD on the weekly chart, stands at the edge of the turning bearish. So bulls have to start upward action right from this area, return price back, or in the perspective 1-2 weeks, context could turn into the bearish. So currently those who trade on a daily chart should wait for bounce will happen and then start searching chances and considering situations for possible taking the short position. This is context for the daily traders. On the intraday chart, situation stands a bit different because we have bullish stretch, and scalp traders on lower time frames could consider some bullish setups for a possible upward bounce to some of the Fib resistance levels. At this point, I do not see something interesting. On the hourly chart, initially we thought it may be head and shoulders, but payrolls just collapsed and actually destroyed any chance to form any head and shoulders pattern. Now we do not have anything. Since performance stands bearish, we strongly recommend, if you still think about taking a long position on the intraday charts, wait for a clear bullish pattern to be formed. Do not act without the clear pattern because it might be really costly. And finally, last thing, on the 4-day time frame chart, we're still watching for Jordan upward directional patterns, because after payrolls collapse, our thrust has become even more attractive, and here any pattern will be interesting. So whether it will be direct upside bounce to the 110.50, giving us bread and butter sell, or market will form here double repo with a possible retracement back to the 110.77, approximately 50% level. This will be for scalp traders potential pattern for a bounce. So that's another moment to keep an eye on. That's approximate setup for the beginning of the next week. Let's see what will happen. Volatility and activity is returning back on the market, so it might be interesting. And I hope that next week we will get a lot of interesting stuff.